It's my pleasure to start our second day of presentation by investor panel focused on consumer application, gadget, fitness, digital health, and e-commerce. I'm inviting Zach Noorani, Foundation Capital, David Wu, Maveron, John Dougery, Inventus Capital, Vishal Vasishth, Obvious Venture, Kyle Louis from DCM Venture, and Ken Sobajima, KDDI America. I also inviting Fertik, founder and managing partner on Heroic Ventures, to moderate this panel and join later as our judge. I'm also asking every investor with a blue tag, step forward and take your seat at the front tables. You will participate in our judging as well. And it's my pleasure to introduce Fertik, who is a serial entrepreneur and startup investor in Silicon Valley. So he's been on both sides of this picture. He also a member of World Economic Forum Agenda Council on the Future of the Internet and recipient of the World Economic Forum Technology Pioneer Award. Let's welcome Fertik and our judges. Let's welcome.
Thank you very much, Stas. Thank you very much, Stas. And thanks very much to Stas and Anna for inviting us and hosting such a terrific conference. They came off a tremendously successful first day, and here we are to kick off the second day in style. We have the great pleasure of an exceptionally strong panel of investors, experienced investors, some of the most successful investing funds and investing individuals in Silicon Valley and in the world. And so it's my great pleasure to moderate their introductions. And so my job is chiefly to give them a chance to introduce themselves, and we're going to invite every one of them very quickly. We only have a tight 20 minutes here to do this, this part of our session. And so we're going to keep it really tight. And we're on a schedule, so we have less than a minute each to introduce yourselves and offer one interesting or good idea that you're thinking about right now. And so if I could start maybe with Zach, could you pick up your microphone and introduce yourself, your firm, and one interesting idea that you've got?
Hi there. Hi, I'm Zach Noorani from Foundation Capital. We're a 23-year-old firm based in the Bay Area, invested in companies such as Netflix, Chegg, Lending Club, Rover, more recently. I'm a consumer partner here at Foundation. And say what I'm particularly interested in and excited about, and do a lot of investing in marketplaces and e-commerce, and it's really this long-term aspiration of I think us as people to have a more global mobility. To the world is increasingly connected. And our desire to explore and experience and access goods and services and places and experiences that are far-flung from what we do and what we see and what we grew up with, 10 miles from where we are. And you can think of all kinds of different ways in which that's exciting, whether it's and I'll probably keep it there for now.
That was perfect. A perfect answer. And by the way, we're being really tight because we want a chance to hear from them a second time after their intros. Kyle, over to you. Can you, from the very famous DCM, legendary securities investors?
Hello, everybody. Kyle Louis from DCM. We're a 22-year-old Silicon Valley-based global VC. We have offices in China, Japan, and here in the U.S. Given our footprint, I've been spending a lot of time in Asia, particularly in China, thinking about consumer trends, particularly mobile consumer internet trends that have been happening there faster given the population iteration cycles and competition, and seeing what trends over there can actually work here in the US, whereas historically, like 10 years ago, it was the other way around. We're really starting to see core innovation in consumer internet there and trying to incubate and find companies that fit those trends here in the US.
So a terrific bid for the mission of Silicon Valley Open Doors, where innovation's actually happening overseas and finally coming back to the US. And our terrific friend from Maveron, the legendary Maveron consumer-focused fund, David Wu, please, your one idea and who you are.
So I'm David Wu. We've been a venture capitalist for about 6 years at Maveron. Maveron was founded 20 years ago in Seattle, but we're headquartered in San Francisco now, and we have a little over $1 billion under management, and we only do early stage seed and Series A investing in consumer companies that are building breakout brands leveraging tech. And that actually ties into what trend is most interesting to me, is that it feels like it's an unprecedented time to build a venture scale consumer brand. And what this is most exciting is for the end consumer. In the old days, you walked down the aisle and you had to find the one product that could actually match the spec of the functionality you needed, where now there's literally aisles and aisles and aisles, both virtually and physically, of products that at least fit the need of something that will do what you want it to do. And as an end consumer now, you can actually make that choice not just based on the most magical experience, but what that brand means to you and how the values of that company relate to your ethos. And I think that's really exciting.
Terrific answer, and thank you for that. And over to you from Inventus, John Dougery. So another good example of Silicon Valley open doors. Inventus is very active, not only in the US, but also very much in India. So maybe you could give a profile on your main idea.
Yeah, thanks. Yeah, John Dougery. I've been in venture for about 20 years, the last 10 as a founder of Inventus, and we have an office in Bangalore as well as here. Seed, early Series A is all we do. As far as trends and what we're interested in now, we're very excited because we see the current phase right now in startups very much the same as we saw 10 years ago when we started the firm. It really wasn't clear, this transition between Web 2.0 and what's next. And so we made early bets in a number of areas that were really, unknown at that time in terms of social e-commerce, for example, at Poshmark, or in fintech with Credit Sesame, being the first investors when no one else was really interested. And we're looking for that right now. So we don't pretend to know exactly what it's going to be, but we know that the big trends in big data and applying that, whether it's in health, whether it's in a new kind of e-commerce platform, is what we're looking for.
And to be sure, India is on fire right now, the first decacorn coming out of India right now, so you're a bit ahead of that wave.
Yeah, we're not quite at the point where we're reversing the export-import model, like our friends at DCM brought up in China. I think that we're still seeing opportunities to apply what we're learning here in India. But I think India is now becoming much more of an exporter of business software, and so we're seeing a lot of machine learning and business software, vertical SaaS, coming out of India, bringing it here.
Terrific. Okay, over to you, Ken. Ken Sobajima, a very good example of the spirit of SVOD as well, an investor from the Japanese corporate arm of KDDI, which is an enormous company, the second largest telco in Japan. You may or may not have heard of it, but it's the second largest telco in Japan, and he is the head of their corporate venture arm. Ken, please, you and your main idea, or one of your main ideas.
Hi, good morning. My name is Ken Sobajima, the Director of Investments at KDDI. So as he mentioned that KDDI is the second largest telecom in Japan. We have about 45 million mobile customers and 80 million cable TV and internet users. I'm always asking you guys how you can leverage our consumer asset in Japan markets. So I'm wondering if I can embed some technology like a SDK into our existing app so you can get over 20 million customers tomorrow if we upgrade the data.
Terrific answer. And last but not least, from the very famous Obvious Ventures, one of the founders of Obvious Ventures, Vishal Vasishth. Would you please introduce yourself and give us one of your great ideas?
Yeah, I'm one of the co-founders of Obvious Ventures. Obvious, in Valley, is most known for incubating companies like Twitter. We started 4.5 years ago a venture fund with this belief that purpose-driven businesses solving big problems of our times are going to outperform their peers. We invest in 3 thematic areas. One is sustainable systems, which is around reimagining resource-intensive industries. As an example, one of our companies is building diamonds in a lab as a way to disrupt mining industry. Second area of focus for us is healthy living. As an example, one of our companies is reversing type 2 diabetes, a company called Virta Health. And third area is people power, where we invest in future of work, future of money, and future of learning. And one of our companies is LTSE, which is building a new stock exchange around this whole idea of long-termism. So that's what we do. 80% focus is Series A and Series Seed, 20% is growth.
Well, thank you very much. So, and then Heroic Ventures. I'm Michael Fertik. I'm the founder and managing partner of Heroic Ventures. We are hyper-focused on being the first money in, sort of very religious about being the very first investor. So we'll invest in a PowerPoint. We'll invest before you have a PowerPoint. We do not look for product market fit. We don't avoid looking for product market fit, but we do not require looking for product market fit. And we invest only in, basically only in Silicon Valley and in Israel. About 33 investments in the last 2.5 years, and six of them in Israel, and the balance basically here in Silicon Valley. And the idea that I'd like to offer you today, and I'm sure it's an idea that many of you have already had, and some of you on this panel will also share or may disagree with, is to be sure, we know that the broad back of the global economy is now coming online, and one of the great industries that's just ready to be blown up is insurance. And consumers are spending so much money with so much confusion on insurance. And so to be sure, a consumer idea that some of you may already be working on is insurance. I'm seeing better and better companies there all the time, and it is truly a global issue. David, back to you. You had a terrific idea, an explanation that brands, now is a great time to build a brand online. And in some ways that's very obvious, in some ways it might be counterintuitive. Brand loyalty is sometimes seen as going up, but also sometimes seen as going down online. Can you explain how you might think about building a loyalty in this internet age, or are we post-loyalty? Do you have to keep earning the loyalty for consumers? How do you think about that, and how do the best entrepreneurs in consumer that you encounter in this brand concept think about that? Please use your mic, though. Yeah, thanks.
I think the concept of brand has really flipped and been turned on its head a bit. And when I was saying earlier that it's an unprecedented time to build venture-scale businesses in the consumer side, at the same time, there's more noise than ever. And I think that the end consumer is also more fickle than ever with sort of infinite shelf space. And so what ends up happening is you can hyper-target with paid marketing and get that one customer that wants that one thing and get to $10 or $20 million of revenue, but there are so many companies that then flatten out. And when you start to dig underneath, you really have to find the companies that I was mentioning earlier. The company really stands for something, and that person who's building a relationship with that company is purchasing that product not just because of what it does, but because of what it means to them to buy this product. And that comes from every delight point to what the company stands for, to whether the company's hypocritical about how they act towards their employees, towards their consumers, or towards the world. And so it's a very interesting time.
Is there a good example, either within or without your portfolio, you can choose which, that represents that trend that you think is doing a good job of that, either one you've observed or invested in?
So one company in the portfolio that is still very much in its early days, but in the beginning was sort of misunderstood, is a company called Allbirds, which is a shoe company that would had probably the best first couple innings of a company in the multi-channel commerce space that was labeled by Time Magazine the most comfortable shoe ever. And what people didn't understand at first is that, it'd be easy to discount this as, oh, great, and that's the last thing the world needs is another shoe company. But when you start to dig into the ethos of these founders, what they really figured out is that there's been almost no innovation around the materials that shoes are made of. They are less comfortable, and even more importantly, they are not very sustainable in terms of some of the biggest waste around the world is from old shoes getting thrown out. And so this combination of a shoe that is so comfortable and at the same time drives to a sustainable world has just exploded out of the gate. And we've been super excited to be part of the Allbirds journey. But it comes back to these founders to believe in a world that looks really differently than us.
Perfect, thank you. Zach, I want to give you more time to amplify your idea, if you'd like, on, I think you were characterizing mobility, either mobility as a function of technology or mobility as a function of experience. Maybe you could unpack it a little further. Unless I misheard you, and you can build on whatever you were saying. That was your idea.
Sure. I think in the essence of it is trying to decide which direction to go in. I think one of the opportunities here is that as a broader and broader population of the planet really is connected by way of really just the smartphone data plan access, and really kind of learns about what else is available beyond in the broader world. I'll give you an example of a company I recently invested in called Grabber. You live in Argentina. You are daily taunted by a vast array of products and goods that are available throughout the internet that you can't buy. You can't buy from Amazon, you can't buy from eBay, you can't buy from Macy's. But you can see the prices, you can see the products perfectly displayed. And so how do I go about getting those? Now, because everyone has a mobile phone in their pocket, there's now a very feasible way to connect you to a courier, somebody who's traveling to your destination from one of those areas where it's very easy to buy that product at a very low price. And what I'm very excited about is that opportunity to sort of connect the dots in a very kind of low friction opportunity, and broader and broader kind of more borderless respect in the way in which you can imagine customs offices not really loving the idea that it's those goods and services are so accessible, and the ways in which something like a blockchain can kind of circumvent any of those kind of regulatory bodies that seek to kind of hamper. I want that that iPhone, and I don't really want to pay 100% tax on it. They're increasing the array of options to access that. It's a little bit more what I meant.
That's a terrific and a good call for connecting the world. Kyle, back to you. What's a good example that comes to mind? You can have invested in it or not, but an example of some very good core innovation that you're now seeing. You made a call for an observation that core innovation is now not just a Silicon Valley event. And maybe that's obvious, maybe it's not, but could you offer an example of something you've seen that you think is very remarkable?
Yeah, absolutely. So we saw the bike sharing trend in China very early. We studied the market. The valuations were outrageous, and we were amongst the first investors in Line Bike here in the US when they wanted to start that company, when VCs didn't really understand. VCs in Silicon Valley didn't really understand what had happened in China, but we were very familiar with it. Another example would be we were the first investors in Plenty, which is a vertical farming company. Vertical farming has been around in places like Japan for quite some time, and we're studying the market there and realized there's actually a huge need here in the US, and having built that core innovation in the US and then...
And vertical farming is literally the practice of having baskets of, or rows, vertical rows of grown agricultural products in warehouses or similar spaces, so you make better, higher, dense use of the land.
That's right, with 1% of the water, and we're really kind of at this point where the intersection of technology, IoT, energy makes it actually economical to do.
Terrific. Vishal, over to you. Offering you a question, you can decide if you want to answer this one or one of your own choosing. Obvious Ventures has a lot of focus, among other things, on health and on people's health and scaling health and population health and so forth. What is a trend or an idea that you think is either worth investing in or worth investigating now that within Obvious you guys are thinking about in the field of health? A call for health, because we haven't yet heard much from this panel on health.
Right. I can choose to answer something else, but I'll answer that.
Yeah, you can. Great.
At Obvious, we think health in a holistic way, and there are kind of three components of health which we invest around. One is food, second is care, and third is life. And in each of these, we have certain point of views of where the world is headed in the context of improving health. So in food, there are a couple of trends, or a couple of kind of ideas which we have invested around. One is food goes fresh as a theme, and a company called Good Eggs we are investors in. Another theme which we have invested in is plant-based proteins, and so one of the companies we have invested in is Beyond Meat in that space. Health care, we're going through a huge transformation here in US, and healthcare is pretty screwed up. And so we are investing in a thesis around tech-enabled, full-stack healthcare companies. So this would be companies like Verta Health, which is reversing type 2 diabetes. This would be a company we've invested in, MA Plan, started by Todd Park, a company called Devoted Health, which is building an insurance company from grounds up. Recursion Pharma, which is a pharma company using machine vision as a way to find drug discovery. And then in life, one of the themes which we have is how can you innovate around this whole idea of kind of giving time back to people rather than taking time away. So we're excited about that as a guiding philosophy for investments. One of our investments is a baby crib company, which makes the baby sleep when you are new parents, and so that'll be a good innovation if you are new family.
Thank you very much. Great examples. So Ken, over to you. The same rule applies for this question. You can decide you want to answer my question or another one that you prefer to answer. Japan clearly is leading the way in a number of parts of life and society, and in one way in particular, the aging society. Japan is getting older, and of course Europe might be following, and even perhaps the United States after that. So that's a trend that we might like or not like, but it's a fact. Are there interesting opportunities that are global for technology that might satisfy the interests or needs of an aging society, and how should entrepreneurs and investors think about that?
Yeah, that's a good question. So Japan population is saturated today, so there are a lot of elder guys in Japan market. So we are thinking about the investment in that space. But nobody knows the technology itself. So elder guys doesn't know how to use the technology itself. So we are always wondering how we can support the elder guys to use the technology itself more easily. For the consumer side. So we have a bunch of assets to support the consumer side. So not only the technology, but also another asset we should provide to the consumer side. So we are already thinking about that.
Terrific answer. John, bring us home. Anything you want to say to us as we get ourselves ready for this interesting judging opportunity?
Yeah. Well, one of the things I mentioned earlier is about the export of technology out of India, and I think we talked about this out of China and other places. I think some of the challenges in these emerging markets are really instructive and then applicable globally. And so, for example, in health, in India, it's one of the highest rates of heart failure and one of the highest incidence of diabetes. A lot of health problems, well beyond what we have here per capita. And so we're seeing a lot of companies that are innovating in imaging technology. So we've got the company that's leading the way with GE to basically get EKGs done automatically by the machine and not by humans, and augmenting radiologists, but ultimately will displace them. That's coming to the US with GE and that company. And we're also seeing, for example, the convergence of the Fitbit, of digital health technologies, and then what do you do with that? Okay, you get all this information, you get convergence of all this data, and consumers just want to be told what to do. And we have another company called Healthify Me that, again, if you're a diabetic or you're pre-diabetic or you're disposed to that condition, they can not only suss that out for you, but then tell you what to do.
So diagnosis, but also actionability.
Taking action on it, right.
Terrific. So I'm going to look now for my big bosses, Anna and Stas, the big bosses, and I think that the shot clock is running down, but I think is our friend Stas ready to come up, or he is... Okay, now comes the moderator doing a dance to make sure that we have enough time for Stas to come back into the room. So I'll give you one more thought that I have for Heroic, which is very terrific, and I was so glad to have planned this explicitly for exactly this moment. So one thing that I want to do to amplify, one observation I've made as someone who's investing also in non-Silicon Valley companies, maybe I can start there because this is a Silicon Valley open doors moment. And of course, I invest outside the US only in Israel, though many of you are from other terrific places. One observation I've made is that successful Israeli companies are very similar to successful Estonian companies, which is to say they use their home country only as a test bed and not as a market. And one of the big mistakes that I've seen over and over again is companies in relatively small markets, and let's face it, most markets are relatively small compared to the US and China, are using their home market as an actual sort of market rather than focusing right to the US. And the second correlated mistake is they then go to UK because it's closer than the US. So my advice is skip everywhere except for the US, or if you're in China or in India, those markets, and come straight to the US. And it's a terrific sign if you do, and you have a terrifically higher chance, I think, of economic success. Others on the panel may disagree. That's my view. I welcome back to the stage our friend and our big boss, Stas. Stas, I'm going to take my seat as the judge, and thank you very much. Thanks to our terrific panel.
Thank you, Mike. Great panel, very good discussion, and now we're going into start the presentation and judging. So first of all, thanks to Google, our sponsors. They provide these nice toys, and it's the first time we're using electronic voting for our judges. Just in case, for backup, we still have a paper. If you need, it's 3,000 years old technology works. Just in case. Yes. Dear jury, you also have this. Sorry? Oh, jury, you have this score sheet. Please fill it up. Your vote, we counting your votes, and it's participated in final decision. Now, everyone in audience, this year we implement public voting, which not counted for awards, but it's counted for you. You could test yourself against our judges. Eventually we'll publish and we'll send back to you evaluation how good you are as an investor. So please download Silicon Valley Open Doors SVOD 2018 application on iPhone or Android, and you could vote for the companies, and later we'll compare your vote with the professional one. Now, my pleasure to invite BHander. BHander, where you guys? And you have clicker. Perfect. Can we have BHander? Perfect. Good luck. Let's welcome BHander.
Hello, good morning. It's my pleasure to be the first here. I feel a little bit like Tim Draper yesterday. He was opening the speeches. I'm Rostislav Futalo, and I'm a CEO of BHander. And at BHander, we know how to make majority, 99% of the population of the world using crypto in their daily lives. Before I go further in my presentation, I would like to do one small thing and just want you to feel what you think about what I'm doing. So this is my wallet, real one, with the real cards from real banks. This is my Visa Platinum for you. This is my Diners Club Gold for you. Sorry, this is the ATM card.
What about this side, my friend? Nothing here?
They already took everything, actually. So to make it easier for you, I put the same PIN code, so it's 1, 2, 3, 4. Yeah. So how do you feel about this guy presenting? Is he really here for getting some financing? Maybe not. Yeah, he's weird. Yeah. But actually, this is what majority of people do with their crypto wallets when they have and using especially the electronic wallets, online wallets, because the only key to your money, to your crypto in electronic wallets, you keep somewhere else in somebody's server. So really, are you secure? Not. So that was just for demonstration. Sorry. You can keep the card, actually, but the big difference between crypto and fiat currency is I have a bank at least to go there and to claim my money. I have the courts, actually. Yeah, so there is some recourse. With crypto, when you lose your key, you lose your money, basically. And then you can join the club. You can join this guy. Welcome, Russ Hanneman. And welcome to the club of those who lost. It was 300 million, I think, what he lost. Then going more serious, yeah, we talk about security in crypto, and we talk. We are thinking why the people are talking about the crypto world, but it's not really a world. It's a limited club of enthusiasts, of IT professionals who really know the risks and the technology behind it. And there are people who believe they know the risks and the technology behind it, but still all this group is very small. And I really appreciate yesterday's speeches of Tim Draper and Professor Athay speaking about financial inclusion, speaking about future convergence of crypto and fiat currencies and the regular currencies. So yes, that world will be more regulated, will get more regulated and self-regulated, but still, why it's so limited now? It's security, which I demonstrated. It's also complexity of using the crypto. For people from the road, from average people, it's very difficult to understand all these manipulations you have to go through to keep your money safe. And the daily life transactions, the small transactions especially, they're pretty costly now in crypto. So, ladies and gentlemen, I want to show you BHander. Let's meet BHander. This is the solution which I mentioned will bring the average people in many countries using crypto as a payment method without noticing they're using crypto, basically. So what is BHander? This is a crypto wallet. It's a multi-currency wallet. You can choose among the currencies. You can add also fiat, regular currency to the menu the moment the banks will be ready to operate with it. And that moment is not that far. And this is not just a wallet. This is a payment solution, too. It has a size of credit card, so you can put it in your physical wallet. It has very easy UI UX. It's actually for a transaction, and I will demonstrate it on the next slide on the small animation, how it works. You choose the amount, you choose the currency, you confirm with your fingerprint scanner, and off you go. The big differentiation from all existing solutions in hardware wallets, everybody knows about Ledger, Trezor, and et cetera, is that you never connect it to other devices. Because connecting via USB to your computer for transacting your Ledger or your Trezor, or you name it, you still build a bridge for data leakage, for any penetration. And the more people will be using crypto, the more attempts to steal money will be there around. And second, what we came out with, it's a wireless connection to the internet. We have a blockchain behind it, so the BHander talks wirelessly. It has a mobile SIM card inside to our blockchain, and then further transaction goes to the cryptocurrency blockchains. So how does it look? The use case. First, peer-to-peer transaction. I have a BHander, you have a BHander. We meet, our infrared sensors talk to each other. I choose the currency, the amount, confirm send, you confirm receipt. That's it. You will tell, of course, OK, guys, how many BHanders are around in the world? Not that many. This is a working prototype which operates in a real blockchain environment. Actually, it's now on Stellar. So the main use case would be the next one. Thanks to the optical sensor, we can read from any screen. So any online transaction you generate, you choose the payment method BHander, and you confirm the transaction. That's it.
Thank you. Time is up.
Thank you very much.
Now time for questions. I'm sure that there is a lot of judges.
And a lot of money.
What is the cost of this, the device, and what are your BOM costs, what are your retail costs?
Yeah. As I mentioned, now we're in the prototype, the working prototype state. Cost to produce it now is about $25. On industrial scale, we see something below $10.
And what are you selling for? Or what will you sell it for?
Coming back, these figures, the sales figures, it's a combined model selling the device and the transaction fee. We put conservative transaction fee per annum, $5 per device. And the selling on the first 2 years would be $50, coming down to $25.
You mentioned earlier that the people who are transacting now are sort of the 1% in an elite club. Are you focused on both those early adopter elite club with a better solution and opening up the market to the masses, or are you focused much more on the masses?
We've been to conferences globally and so on, so those who know what is the wallet and so, we get a lot of questions, so can I buy it? Yeah. So we can have also, like, you know, Swarovski edition for I'm kidding about Swarovski, of course, for those, let's say, professionals, yeah. But our real market is those people that, like Jed McCaleb mentioned, the founder of Ripple. Yeah, so we want the people not noticing they're using the crypto. So these are our markets. And street merchants in the Philippine streets, in India, in Eastern Europe, whatever you mentioned, should be, even without those unbanked, they should be able to easily use it. Yeah? Because as I mentioned, you can have it multi-currency, including regular fiat currencies here. And we know what we are doing because it's a strong team of IT specialists and fintech and ex-bankers. I'm personally both engineer and a banker for many years. So we believe we know what we are doing, so we really need your support, guys, to just go to market.
You know, to go to that broader market, do you see a way or a roadmap where your device is no longer required, where this could migrate in some kind of software application to the smartphone that everybody already has?
Yes, and we believe we're ready to it, at least in our strategical thinking. One school of thoughts would be that, all right, everything will migrate to software, to electronic. Second would be that everything goes to your smartphone, so this will be a part of smartphone. Yeah? Currently, there are risks associated with the smartphones. So whenever you put it as a part of the smartphone, you are vulnerable because, let's say, the average 60+ applications you have in a smartphone, each one is a threat to steal your private key, and as you don't have a bank to come back. So we believe that for foreseeable future, the hardware wallets, but really secure hardware wallets and autonomous like this one, would be the solution. And it's so cheap, you know, the Stellar or the Ripple can airdrop them to the people on the streets, like millions of devices with the one coin there, and start using it.
What's the go-to market? Is there a particular focus, a certain country you're going to focus with to start with? Or?
We came to the US, of course, yeah. This market might be not the first to start with. We really are thinking about Asian markets. Take one big Asian country, like be it India or be it Philippines or Indonesia, to start with. And for that's why we're here, actually, because we don't have muscles to do this now. So we need a smart money partner for that.
Okay. Thank you, BHander.
Thank you very much. Thank you.
Did you got your...
My cards? Okay.
Next time, bring more cash. And my pleasure to invite Lomics. Let's invite Lomics. Lomics. Please, your time is up.
Hello to everyone. My name is Arthur, and I am CEO of Lomics, a visual storytelling platform for teens, Generation Z, and probably the most boring generation of people in history. For example, they spend 3 times less socializing with their friends and partying than their peers of 80s and 90s. Instead, they stare at their mobile devices and look for new sources of digital experiences. When I was a teenager, I used to be very competitive. I constantly felt that competitive pressure from my friends and classmates, and now it's gotten a whole new level where everyone is competing with the whole world on a social media. Social media created this new generation of people, which is bored, anxious, and depressed. Is there an alternative to this? Can we create a social platform which will be still as engaging, but won't have all those issues with depression, low self-esteem, and anxiety? Here's what we came up with. We call it Lomics, or live comic strips. No sound, so you can play them back as a video. There is a sound in the background. We just, for some reason, technical reason, you can't hear it. OK, You can record them live, just like you do the same way you'll do with a video. Or you can choose from one of the many templates which we provide. Here I'll show you. I select this M&M template. And just following the steps, like 1, like I'm an actor, 2, and 3. And that's it. The story is ready. So it's the same way. You can play it back as a video. So we believe that social media is not a problem, it's just the way you implement it. There others will have this fake, distorted representation of reality. We'll have fun comic strips. Our audience is unlikely to insult you personally. They'll just comment on your story, on your creation. You can download the app and check yourself. No personal insults in our app. Our main value is not to create the best-looking version of yourself in a selfie, but just have fun and be creative. We're able to acquire a monthly active user for $1 on the US market. It's very important because startups like ours usually are valued based on the monthly active user base. But we're not going to spend the money for user acquisition forever, because our metrics allow us to grow organically. Recently, we've been growing at a rate of 80 to 90, like 200% per month. And our key factor is about 1, and the retention is among like the world leaders. So we are able to grow organically at a rate of more than 20% per month. We're going to monetize this audience the same way you saw on that video with the M&M template. You can create this kind of templates for any sorts of products, teenage products, or brands. For example, even that M&M template which I shown you, which I created myself, generated thousands of stories created and shared on social media and generated 100,000 of views. For our growth projection and this monetization model, we'll be able to at least generate at least more than $100,000 of monthly revenue within the next few months and become a cash flow positive by the end of 2019. But that's not it. Our format allows us to translate the stories from any language to any other language on the go, because we don't have a voice. This will help us for international and global scaling. Also, Lomics is a great platform for all those new modern technologies like AR, like 3D AR mask, visual effects, changeable backgrounds. It's all technologically possible right now, and this will allow everyone to become like a movie director without leaving their house, like a small comic movie director. We have a very well-balanced team with the world-class experts from mobile technology to marketing and business. In order to make this thing real, we are raising $6 million. And with this money, we promise you to become cash flow positive by the end of 2019 and have 20 million monthly active users. Thank you.
So I thought it was very interesting. We're actually investors in Musical.ly, so understand this segment quite well. How are you acquiring your users today, and how much of it is organic, referral, versus other channels?
Yeah, we don't spend money on advertising. Instead of that, we are we have a social platform, and there are content creators. We pay to the popular content creators, which also have Instagram accounts and, of course, Musical.ly accounts, because we are the same age group. And they post the stories like a video in our format to their social media too. And it's not like they're not inviting anyone to the app. They just see that something different, something new. They see the watermark, and they just come to the app. That's the one part. The other part, as I mentioned, we have a virality. Yeah, we have K factor of 1 and good retention. And even without doing any user acquisition, we will grow just organically.
I guess, are you currently a utility where a lot of the content is posted on Instagram and Musical.ly, and how do you kind of transition to being a platform yourself?
We're actually both, because people, if you download the app, you'll see that a lot of comments, a lot of use within our app too. People spend significant amount of time in the app, about 8 minutes per day, and they definitely creating the content, browsing the content. And they also like to share a lot. About 40% of our audience will share their content outside of Lomics because they have following, for example, on Musical.ly or on Instagram. They want more people to see it, and that's how we grow.
Can you tell us more about that engagement? 8 minutes per day is really impressive. What are they doing exactly for that 8 minutes? Are they creating? Are they consuming? Are they interacting? And more importantly, can you tell us more about how, it's a month, 2 months, 6 months down the road, how does engagement look? In other words, what does retention look like?
Yeah, the retention is about a 25% monthly retention, and this comes from install. And I checked, I checked the competitive metrics from the other social platform, like Snapchat and Musical.ly included. It looks at least on the same level as those platforms, those popular platforms. I mean, of course, no one has the exact numbers, but the estimations looks about the same. So on the retention side, we're doing pretty well. For a time distribution, I would say that, of course, I mean, the story creation doesn't usually take a lot of time, and because, I mean, you saw that you can create in a matter of seconds or minutes. I think it's it's both. We don't have this time metrics, how much of the time they spend, but we definitely see that people are viewing the content, people adding the friends, and it's the amount of followers added is growing all the time. And we see that it's actually they're treating it as a social platform a lot, yeah.
Just to follow that up, though, what is the split between the number of your monthly active users that are creating versus consuming?
About 40% of the users, from 30 to 40%, will create at least one story. So I don't know, there is a gap between content creators. But I would say a real active content creators which will constantly create new content will be 15-20%.
When is the best timing for you to accelerate your revenue stream? How many numbers do you need?
Yeah, I mean, it's of course, when we are starting to monetize, we don't want to affect the growth, yeah? So it depends on the monetization technique. For example, we can run some kind of challenges, for the brands, and do the templates. For example, this M&M templates is no harm for us. So we can start to do it test monetization very soon, because we already done this M&M testing. We are working with brands right now, and this summer we likely will have more tests of these challenges. I mean, I won't go personally. I don't like this display ads and things like that, and we're unlikely to add those kind of things anytime soon before we get to really big numbers, tens of millions of monthly active users.
Who is that sweet spot for that? Super active customer? Does it look like the Musical.ly girl, or?
Musical.ly girl is a good spot, but we also tested not only this audience, but also we have, as you've seen, probably their pet lovers, their comic fans. They're among every age group, we see that the retention numbers and the engagement numbers are not looking bad. But right now we're focusing on this teenage group because we see the best growth and best numbers there, and I think it's a good strategy to acquire this part of the market first, and then go after the comic fans and other segments.
Thank you. Thank you, Lomics.
Thank you.
Thank you. Dear judges, is the system work okay? You managed to enter, yes? Yeah. Everything okay? No need for paper. Perfect. So some progress. My pleasure to invite Odeeva. Please welcome Odeeva.
Good morning. I am Krista George. I am the co-founder and chief menstruating officer for Odeeva. Odeeva is a monthly subscriptions for all things menstruation targeting the millennial market. So this is a topic that's probably going to make a lot of you feel uncomfortable in the audience, but the reality is it makes 50% of the population uncomfortable on a monthly basis. So like most women, my story starts at 11 years old. Welcome to womanhood. You are going to menstruate for 38 years. Wasn't expecting that. Lifetime value. Like all women, and I'm sure a lot of you men in the audience, you've been brought to the unpleasant experience of retail shopping for these products. Down the huge aisle, huge selections made for the mass, for your whole life cycle. What I've identified here, it's a problem, Women currently don't have the option for customization of mainstream products. No major manufacturers currently offer customization. They don't have the right products at the right time, and because of these combo packs of tampons, combo packs of pads, and liners, they don't have the right absorbencies and quantities that they need for their cycle. And there's no one-stop shop for PMS products and menstruation products. So Odeeva is here to offer the solution. We are a millennial discovery outlet for menstruation products. We talk to millennials in a voice that's relatable, that's educational, teaching them about menstruation and that it's not taboo. We're offering affordable, white-labeled, Odeeva-branded products for your time of the month and convenience. It's pretty simple. You set up your profile, you pick your quantities, your absorbencies, and your delivery schedule. You can change or add products at any time. So Odeeva was founded in 2017 in Q4. What we've built is a scalable model. We've proven that women come and they stay. We have a 95% retention. Day one was pretty scary. We had a cost of acquisition of $138. We've been able to drive that down below $20 at certain points. We're currently offering multiple brands and building our brands off the back of giants and other participating members of the menstruation world. So if we look at the lifetime value of these users at only 3 years, which we know is very small for what it can be, it's $632 of revenue. So the millennial subscription addiction. The subscription world has grown 3,000% over the past 3 years. A lot of these subscriptions that are popping up are a want, not necessarily a need. But this is something that has to be replenished on a monthly basis and will stand through any economic times. Also, with our brand partnerships, we're able to really scale and reach these millennials, offering additional products outside of our own white-labeled products. So millennials, they are more likely to purchase online and more likely to buy from a socially conscious brand. If we look at the feminine market in the US, it's $5.9 billion and growing. And if we target our addressable market, it's $1.4 billion. So competition. 84% of the market is run by Procter & Gamble, Johnson & Johnson, and Edgewell. These all have built their business on a B2B business model with no customization. They are not talking to the consumers, to this niche millennial market in the way that we're able to talk to them and bring them in and create that community. There are current subscription business models in this space. To date, all of them are focusing on a cotton organic market, which accounts for 5% of the market. That market will only reach $220 million by 2020. So don't discount organic. We will offer those products, but we want to target the 95% outside of that niche market. So the dream team, we have, all have startup experience, digital, serial entrepreneurs, multiple successful exits under our belt. So our vision, this is just the start. There's so much scalability to this. We see this as a global platform. We've just purchased a period and ovulation tracker, and what that does, it gives us access into the data of our subscribers. So we know when they're ovulating, when they're trying to get pregnant, what type of birth controls they can have, which they take. And there's also hormonal is related to purchasing patterns. So we're able to really target market and expand extension products based on their life cycle in their millennial ages. Also, we're looking at launching a first period kit, which will be out in the next couple of months. And what that does, it gives young brand identity and helps parents talk to their children and educate the kids about adolescence and what to expect in adulthood and diminishing that taboo. So there's a huge need as well in emerging markets around the world, but in the US alone, there's 42 million women who live within a low-income environment and unable to have access to the quantities and the products that they need and use. So we are going to be helping those women. And fads come and go, but Odeeva and periods are here to stay. We'd love to have you as part of our growth, and today we're looking for our pre-seed round of $500,000 convertible note, as well as strategic partnerships to help grow our platform. Thank you.
Thank you for a great presentation. Questions?
It'll be great if you can talk a little bit about your background, as well as what would be potential margins in this business, given you're going to be selling other products, right?
Yeah, I've been consulting and advising for startups for the past 7 years. I come from a corporate background working with Fortune 500 companies in building technology platforms and packaging and operations globally, handling projects for video game companies. And the margins on this product, so we're at a break even at about 14,000 users. We have the ability at scale at that to have a 60% margin on these products. Yeah, year one, 42%, and year two, 60% based on scaling.
So at a box level, you'll have a 60% margin at scale, but like starting, it will be break even.
Yeah.
So first of all, as a parent of 2 daughters that are 10 and 13, and an investor in modern fertility, I love that you're out here talking about this and embracing a subject that affects so many people and should be talked about. So I'd start there.
Yeah, and that's what we want to do.
The question I actually have is the economics of this business makes a ton of sense, and it makes a lot of sense why the incumbents have no clue how to relate to the young, millennial. I think the real part that I wonder is, to be honest, this is the 3rd startup I've seen this week that is very similar in what they're trying to do, and it's because the products themselves are pretty commoditized. It's not hard to put a string of cotton and package it in a slightly different packaging. So I think you'll see the incumbents disrupted. The real question is, why is it you guys? And why is that 15-year-old girl going to pick your brand versus the 4 other startups next to you?
Well, we're not focusing only on our brand. We want to be that one-stop, cosmopolitan for the millennial market. There's so many new niche products out there, reusable liners, there's cups, there's a huge segment, and these niche companies aren't able to be exposed. And millennial women don't know about these products. 84% of them are shopping at retail. And we want to be that visual and offer that brand and really talk forward and be loud. We want to be that relatable.
Could you maybe get more specific about who your customers are today? I hear you saying they're millennials, but where are they in their life stage specifically, and even more specifically, what is it what is the value proposition that they're getting from your service today? For instance, I could see a large amount of convenience. Maybe it's value. Maybe this is they perceive your channel to be cheaper, or maybe they just actually aren't. Ideally, there's a product mismatch, and they're not finding what they want, and they're looking to you to help direct them in a better way. But what is it specifically that you feel like they're getting from you today?
So we are an educational platform as well, so helping women understand. I mean, there's women in the audience. I bet you if I asked all of you right now, when do you check your breasts during your menstruation cycle? Women don't know about this. And our age right now is 28 years old, is kind of around our median customer. But women are just not comfortable, and it's been a taboo, and it hasn't been talked about. And how many men in the audience have ever held a tampon? A woman menstruates, a lot of you are married, it should be more mainstream, and we really want to become that mainstream in talking to them.
Question from jury.
So as it was noted in an earlier question, this is a commodity now.
Yeah.
And my guess is that most women buy for the value, especially since you said later on you're targeting lower income women. And I'm not really sure if I would agree that this is as a taboo. I mean, there are different levels of absorbencies available if you go to Kmart, if you go to Target and other places. So how would you deal with the fact that you have to offer a better price and a discernible value beyond just the educational and other aspects of it?
Absolutely, great question. So when you go to a retail outlet right now, if I buy a combo pack of tampons, I get a specific quantity, and every different manufacturer makes different combo packs. So I may have 5 lights left over while my friend has 10 supers. So you're not getting exactly what you need for your cycle and flow when you need it. So this is a commodity business. We're targeting millennials, so we're helping the low-income areas. And sorry, what was the second part of your question? Pricing. The pricing. So yes, this is a commodity business, but there's so much more around PMS. There's PMS cramp pills, there's pregnancy tests. We're different than Amazon, we're different than retail. It's your box, it's your choice, it comes, it's private to you, it's not a family affair. So a woman can get all of these needs that are based around menstruation through our service. So it's different than that retail experience of embarrassment. For example, 60% of women in the US that are sexually active right now have never purchased a condom. We're selling quite a few condoms. So there's a need for that privacy for women that don't feel comfortable.
Thank you, Odeeva. Thank you. Okay, and now it's time to introduce our jury. Please, we have a microphone. Please. Please introduce yourself, your fund, or if you're individual investor, what your focus and interest.
My name is Sanjeet Dang. I'm an investment director at Intel Capital. Intel Capital is the venture capital arm of Intel Corporation. We invest roughly $400 to $500 million every year in startups globally. We are pretty heavily investing in artificial intelligence, computer vision, especially video-oriented applications, IoT. And stage-wise, we are quite stage agnostic. We invest seed to late stage, but I would say our sweet spot is somewhere around Series A and B. And we lead 60 to 70% of the deals we do.
Hi again, I'm Safar Aishi, general partner at Think Plus. We're an early stage seed fund. We focus on digital health, consumer, and select enterprises. And our approach is that we look for very big pain points and unique solutions that lead to multi-billion-dollar market, and we do our own research, so we don't follow necessarily the trends, but digital health is one area we focus a lot on. Thanks.
My name is Norm Gitis. I am a managing partner at Lima Ventures. We invest in life science startups, medtech, biotech. We invest in seed A rounds, and then when we invest in the startup, we invest pro rata in all follow-on rounds.
I'm Sherry Chuang. I'm an investor at Sandhill Angels and Stanford Angels and Entrepreneurs. Sandhill Angels is a group of 100 investors, and we do early stage seed funding. My background is in enterprise SaaS. That's where I invest in IoT, artificial intelligence, as kind of that whole software infrastructure goes to AI-based and all that ecosystem of tools as well. Yeah, my focus is in product marketing. I've come from the Cisco WebEx, part of that whole founding and acquisition by Cisco.
My name is Alisa Yaffa. I'm an angel investor and the managing director of Step Up Funding, located in Menlo Park. And my background is in none of this. It's in electronic design automation software. And that's a small industry, but that's why I'm not in it anymore.
My name is Eyal Bilgrey. I'm an impact and fintech investor and advisor.
My name is Itzik Lerner. I'm the CEO of Procforce, development shop. We have over 120 programmers in Russia, Ukraine, Israel, and here. We invest early stage. We invest money, and for some companies, we also invest in development programs. We provide development. We help our portfolio companies to pass their first steps. If somebody needs anything, come to me later.
Hi, I'm Nancy Hayes. I'm an angel investor across a wide array of sectors, and I focus on women-led companies.
I'm Yuri Svitsky from Integrity Ventures, founder partner. We do early stage investments. Also, we accelerate startups. Our concentration is B2B, B2B2C. Then IoT, BPM, ECM systems, and in verticals, in cross verticals, telco, retail, energy, and some others.
I'm Ilya Karas. I'm an investment director for Pulsar Venture Capital. We have offices in Kazan, Russia, in Silicon Valley, and in Ireland. We invest in seed and round A. We focus on blockchain, music, entertainment, and sports, and industrial. Thank you.
So, jury, okay. So as you see, we have very good mix of large funds, individual investors, seed funds, and so on. So please be available for startups to catch you during breaks and lunches. So let's continue. Now my pleasure to invite World Mastery. Let's welcome World Mastery.
Morning, everyone. This is Daniel Brosa from World Mastery. This guy here is Tony Nadal. Before he reached with Rafael Nadal, the #1 tennis player in the world, he had a problem and a dream. The problem he had was actually to attract students to their small one-court tennis club in Monaco. The dream, of course, was to coach one day a tennis player to be the #1 in the world. Nowadays, obviously, he has solved both problems and he has reached the dream. He coaches now in a 15 tennis club court and has more than 15,000 students. And he has seen his dream come true with Rafael reaching #1. But wait a second. Are we talking about dreams and problems? Or are we talking about a career? Are we talking about money? Are we talking about a profession, which is being an instructor? So yes, we are talking about all of this. And this is what World Mastery is about. We help instructors earn more money from their lectures by providing them certified methodology from celebrities on their industries. And we do so on the dance, tennis, and paddle verticals. We are expanding this year to basketball and to other sports. Our typical customer journey, how it starts. It starts with a basic monthly subscription. This is a content as a service. And for this $99 a month, you, as an instructor, you get on our platform 1 video unlock per week. You can continue on the monthly subscription, or you can unlock new content by paying more videos on the platform. In the dance sector, you can pay up to $21,000 if you buy all of our content. And trust me, there's one guy that is close to this number. Another important part, right after each course you train on the platform, you get a certified. So you can start doing marketing on that certified. You can start making some ads saying that on your class, you are doing the methodology of the best ones on these verticals. In terms of traction, in less than 2 years, we have an international footprint in 65 countries, being the US, Spain, Italy, Mexico, Argentina, Japan, and Germany, 90% of our revenues. In terms of financials, we also have got a pretty strong financial growth with 1.5 million ARR plus 32% EBITDA margin when we reach the peak performance of the inside sales team. On the last 6 months, We have been growing at 15% months over months. And this is exactly when we start launching, when we start joining the sports industries. In terms of active users, we have 1,500 instructors on our platform, and they teach to 500,000 tennis players or dance passionates that go to the dance studios. Marketing-wise, to capture or to get one client, we pay $85. This is our customer acquisition cost. And from the last 12 months, the average revenue per user has been around $800. Competition. We stand out as global leaders for our category. And this is content produced by celebrities and targeted to instructors and professionals. In terms of the team, me and my co-founder, we both have 7 years of corporate experience, MBAs, and all that stuff that you need to do to actually start up a company, plus 5 years on the startup world. We both had one exit. What we look for? We look for 2.5 million seed round to expand to more masters, to more verticals, to cope these different verticals as fast as we can. And also to strengthen our position, especially in the sports area in the US, and then farther in Asia. And last but not least, I think that is important to actually point out the vision of the company. That is that with our product, with World Mastery, there's 1,500 instructors that are teaching nowadays 500,000 players, and they step into the class, they step into the tennis court feeling they are better, empowered by the best ones. And trust me, the students can feel this. And I'm saying this because I've given the World Mastery to my tennis instructor for free, right? So thank you very much. I'll be happy to answer any questions you may have.
Thank you. Questions?
How many of these masters do you currently have on the platform, and how do you share the economics with the masters that are working with you?
We have 7 masters in the dance vertical. We have 1 master for tennis, Tony Nadal, 1 master for paddle, which is actually a type of tennis that is played in Spain and South America. And we are launching this month 1 master in basketball. The revenue model with them is we pay a lump sum fee at the entry, and then we go on a revenue share.
Do you share roughly what that looks like from a revenue share or lump sum?
Between 15 and 25%.
This is just more clarification. Like, so you making these courses and selling to other instructors, and so that's your market, right? Like, this is not a consumer play; it's an instructor play. Right?
That's correct. That's correct. But the important point about that is that they use our content to actually use it on their lectures. So for them, it's not only training; it's also an investment because they have a methodology. They know what to teach. I'll give you an offline example with a very specific segment, which is Zumba. You know Zumba fitness. What these guys have done offline for 30 years, we can do it in 1 week. It took for them 30 years to build the brand and to build reputation. And the students know that they're going to a fitness studio to do Zumba fitness. But now, since we leverage on the brand of the master, if you go to a tennis club and they say you are doing Nadal methodology, you don't need to build a brand because you already know Nadal.
So the question is, like, so when instructor is paying you, are they also charging whoever they are training, like in a physical ground, like they're charging consumers as well, like for using this content? So they are able to make more money than what they pay you?
Yeah, normally we measure the success for the instructors in 2 ways. First, the retention of their students, and second, if they can attract more students. Our analysts shown that the retention increased between 5 and 10%, and the attraction depends on the sector between 10 and 15%. We provide them a PDF to do some marketing as well. So they put it on social networks, wherever, and then they attract more students to their lectures. So for the dance example, if you say, you want to learn what Shakira is dancing with the masters or the creators of this dance, okay, you attract more students.
What your current revenue, is there a particular sector, segment that is generating most of that? And then going forward, what, you know, what segment are you most excited about?
Yeah. 80% of the revenue comes from the dance sector. But dance sector, if we compare it with the tennis, is 10 times smaller. So we are seeing that the metrics of tennis are between 4 and 5 times better in terms of revenue than the dance. And paddle, we launched it 3 months ago. So the core business is dance. We just start with tennis 6 months ago, paddle 3 months ago, and next month with basketball.
Okay. Thank you, World Mastery.
My pleasure.
Thank you. 2 seconds for judges to enter scores. And it's my pleasure to invite Trumi. Let's welcome Trumi.
Green button. Okay. Good morning, everybody. My name is Yelena Budovska, and I'm co-founder of Trumi, the company who developed a first affordable and very accurate test which we can predict your true biological age and the rate of aging. And we also can give you a personalized recommendation how to preserve your health and live a long and healthy life. So how we do that and why? Well, the good news is we live longer. We live much longer. Unfortunately, we don't live healthier. We actually spend more time having debilitating health-related diseases than we enjoying our golden years. Besides that, by age of 60, most of us will develop very bad debilitating diseases, which cost a lot of money to our GDP and healthcare system, and we're spending about $30 billion a year out of pocket to stay healthy for private classes, supplements, recommendations. But how many of you know that they actually work? Most likely they don't, and you don't know the answer to that question. And as a researcher with over a decade of experience working in aging, I can tell you that the only way before now was to judge whether or not your recommendation worked is follow the subject until it dies. Well, we have a simpler way of testing it. It's all in your DNA, but we're not looking at your genetic code, but we're looking at how your DNA get modified based on what do you do to your body. What do you eat? How much do you exercise? What supplements you take? And what is your fitness activity? These little molecules that bind to your DNA can affect expression of your genes, but it's also very correlative with the biological age. We developed this test that we call True Age Index, which can indicate where you are right now. And if you take the test again, in 4 to 6 months, we can check how fast you actually age. But this is not it. We really love the data, and we love this movement we call citizen science. Every one of us is doing one or another health regimen program that help us to stay active, to stay healthy. So we invite you to partner with us and tell us what you do and how this affects your life. You can measure your biological age with us, and we will give you personalized recommendation based on your genetics, based on your microbiome, diet, fitness activity, your Fitbit reading, the actually data that you can use to moderate your lifestyle. So we're taking data, we analyze them, and we're giving data back to the people to empower them to preserve their own health and live longer. So of course we have competitors, but right now we're the most accurate, affordable, and actionable test on the market. We have 4 business models. And first of all, we're targeting consumers. We need to build our platform, and we need to make sure that everybody is included. We're targeting 200 people so far when we start selling next month. And we're planning to extend and expand it to about 10,000 users by the end of 2018. We also have 3 patents. which we're planning to license technology to other companies, and also participate in drug discovery, the supplements validation, and the food companies to actually discover therapies that work. We have a small team, mighty, 2 scientists and a person who has experience in sales and business development, and we think we can do it. So you will not drive the car blindfolded. You really need to where you're going. So why not let TrueMe guide you to preserve your health and lead you to the healthy and hopefully very long life? Thank you very much.
Question, please.
Yeah, it's very interesting. It's an area digital health scenario we're quite interested in, and we talked earlier. Yeah, I'm kind of interested, we see a lot of activity in this area, a lot of activity in and around this area, and certainly very confusing for the consumer to sort through. So yeah, can you isolate for us and highlight what is the veracity of your approach? What's the advantage of your approach versus other alternatives that people are hearing about?
Yes. Right now, we have information, which is the most important and most powerful thing that I think any consumer can want. So if I go on Amazon and I want to buy B12 vitamin, first of all, how do I know that I actually need it and which one actually works? There is 3,000 Amazon sold B12s, and only a few of them actually do anything for your body. So do the test with that. You want to take B12? Excellent. Let's take B12 together. We give you a second test free, and you test 4 months from now and see if your health actually preserved and you stayed and your rate of aging is not skyrocketing. I know people who take over 100 supplements, medications, doing yoga, drinking kombucha, doing everything right. And then you look at them, they don't look really younger and healthier than they're supposed to be. And God forbid, they develop debilitating diseases later on. So this is what we're trying to do. We're trying to empower people to catch the problem before it starts and actually be educated consumers. So actually buying what they need, not what somebody tells them.
What is the cost for the company to run the tests? What is the cost for you?
$20.
Okay. And you're charging $99?
Yes.
How can we find out your service itself? Now, could you give us more detail about the go-to-market strategy to the consumer side?
Yes. So we are targeting mainly fitness clubs, gyms, dietitians, alternative care providers, and citizen scientists. So I'm talking to a lot of people like Fortify Me groups and so on. And we're trying to sell it first to consumers, to engage consumers into this product. We need about 2,000 consumers to start building bioanalytics platform to connect all the data and actually validate everything. So during this time, so we're going to validate bioanalytics platform. We're going to reach 2,000 at least consumers, hopefully more. We're aiming at 10,000 by the end of this year. And then what we also validate our next, so 1.0 test that actually just from epigenetic information will give us more information about health. And that technology can also be licensed to almost every single biopharmaceutical company in the world. And with that validation of our initial test, we also can offer it to pharma and food companies to run a test on whether or not the products that they produced is actually working and preserving their health. And we see quite a few interest with that. They like the idea that they can add this, and it's also going to extend your lifespan. Boy.
I'd build on what John asked a little bit. In this category, historically, it's been fairly expensive to acquire that new customer, especially if you're doing a kind of onesie, twosie at first, even through distribution channels. How do you think through the possibly prohibitive cost of getting these customers?
We are thinking about this is why we thought about working through like private gym owners and through the dietitians and also clinics. Because when we convince the guy who is running the business, he's sort of acts as a salesman and sells it to their customers. And of course, we want to give them incentives, as many incentives as we possibly get, to actually see how useful it would be for their customers. So when we do that, then it sort of spreads a little faster. And we in talk to a lot of sort of marketing strategists to help us with that particular aspect. I know one thing that usually when we explain, show, and actually let people try it, they come back. So that's for sure.
A question from jury. Can we have microphone for jury? Where is microphone for jury, please? Wait a second.
Sherry Trong. And it seems like there's a lot of friction in the user to really find the health age. Usually, we're doing exercise, we're taking supplements, we get the recommendation from a doctor for back pain or whatever. All of these are in play. And I see this test as something I need to be doing 4 months, if that's the elapsed period, to see efficacy. And then there are multiple factors that are going on. And if it's the use case that you mentioned where we're trying to see the efficacy of a vitamin, multivitamins or B1s, I have to keep doing this one variable at a time, 4 months at a time. Stop exercise or stop doing weights or do this dance class to really dissect what my health age is. And then there's the aspect of cosmetic, as you're saying. Someone looks at you and gives an opinion what they think my health age is. So can you drill into that a little bit?
Absolutely. So our recommendation, first and foremost, if you're not in a red danger zone, stay where you are, and let's remeasure it again. Because what's really important is not necessarily how old you are today, but how fast you are aging within, like, let's say, for a period, 4 months' time. And you might like your regimen. You might like your fitness class and exercise and everything. The second one, if you absolutely want to slow it down and stop it, we usually recommend to change one thing at a time. And a diet probably contributes about 99% to our aging increase. So what we're trying to work first and foremost is around your diet changes that you can follow up for 4 to 6 months and then to see the changes. Yes, I understand it's kind of tough to stay within the program and to stay within something, but this is usually how long it takes to really see the results in almost any therapies that I know of. Like immediate results, like something that you take a pill and have seeing your results tomorrow, probably very temporary, and they're not going to stay.
Thank you, Trumi. Thank you. And while we're exchanging microphone for next presenter, I would like to thank Donna Griffith, who helped. Donna, wave your hand. So startups who want to present, you see the result of her hard work. Okay, once you're ready.
I'm ready.
Okay. Come in, and it's a pleasure, yes, to introduce Euphoria.
Which? A little bit louder? Okay. Thank you. That's my partner that clapped. So my name is Damon Brown. I'm one of the founders and CEO of Euphoria, and with me today is my COO and partner, Jason Morales. Now, raise your hands if you love going to the dentist. All right, we got one fan of a root canal. Have you ever wondered what you looked like in the dental office? That's exactly what it is. Well, we may not be fans of root canals, but most of us could agree that we love a whiter smile. It's the #1 desired treatment in the professional setting. Over 80% of patients want whiter teeth, yet only 4% of them are buying whitening in the professional side. Well, we're all thinking, well, they must be all going to Walgreens and Walmart to buy their teeth whitening. That number is only 9%. There's over 1 billion dental cleanings done globally in developed markets. And in the US alone, there's 200 million dental cleanings done in the US a year. And it creates this market opportunity to where, why aren't you going to get your teeth whitening in the dental office. It's kind of like getting a divorce. It's time-consuming, painful, and it is very costly. It's very similar to what you have in the over-the-counter market, to where it could take you weeks to get results, and you have to spend close to what you could get with our product here. So, and the dentist isn't happy about this either. It takes up an hour of his chair time, and it's one of his least profitable procedures. Think about this. It could take you 2 weeks to get a dental appointment. Once you get there, it takes an hour of chair time, and then it costs you $300 to $500, and often it's a painful experience. This is something that everybody wants, but nobody's getting. So this is where euphoria comes in. Euphoria is revolutionizing the patient experience and how we help doctors make money. It's a 4-minute whitening procedure inside an existing dental appointment. It's affordable. It costs a fraction of the cost of what other procedures are, and it's similar to what an over-the-counter product would be. And it's pain-free. It's 100% enamel safe and doesn't cause any tooth sensitivity. What we are doing is closing that gap on the 4% of actually buying it and this 80% actually wanting it. So by creating this opportunity of having something that can fit into an existing dental appointment in only 4 minutes, so there's no more need to expand and call your dentist and have this painful procedure. Just like the name suggests, for the patient, it's a euphoric experience. You know, it's something that they can get immediate results in the dental office in under 4 minutes. Plus, we have a combined experience where they can do a take-home product over 3 days. And then that will help motivate patients to come back in for their next recall appointment. What we found on the OTC market, that you could buy a 2-week product, but you only do it for 3 days. What happens when you go to Walgreens, Walmart, you buy a product, it says use it for 7 to 10 days. Well, what you do is you do it over 3 days, and then it sits under your medicine cabinet. In the professional side, there's just no time or money into it, so that's what the euphoria experience is. For the doctor, it's a true money maker, to where it changes their chair hour economics to where it's now delivering something that satisfies a core and huge patient demand. I'll give you an example. One of the best examples I have here is a doctor in Idaho Falls, Idaho, population 60,211. In 2 months, he did over 150 treatments. He generated $22,500 in revenue and hit $13,500 to his bottom line without him spending any of his time. So this is a truly incremental opportunity for the dental practice, and it satisfies the #1 need that consumers and patients want. These are incredible results.
Incredible indeed, which brings us to why we're here. How do we make money? It's all about the consumable model, recurring revenues. We sell the machine for about $3,000 a pop, the consumable experience for $60 a pop, which the doc in turn sells for $150. That consumable revenue model have incredible potential. Damon mentioned there's 1 billion dental whitenings, 200 million in the US. A 1% market share grab equates to an annual revenue number of about $120 million. Our journey and how we got here is really interesting. We were a B2C company. After we patented the technology, we spun off the B2B business. That was early last year. And that created the seed capital for our launch, which we did in June of 2017. And since then, I'm very happy to report that we scored 3 consecutive quarters of revenue growth. We've already placed 220 systems, about 6,000 consumables out there, and we're ready for our next phase, which is really going to have the company take off. This last point is the most important point. We only have a skeleton crew of 6 people in Boston, but next week we're going to be joined by 1,000 of our special friends. Henry Schein is the largest global distributor of dental products. 1,000 salespeople coming our way.
Thank you, JC. So the team is made up myself. JC, he was a CFO at a public company. And the key person behind us was Dave Wucinic, which every time anybody that's been to the dental office to get their teeth cleaned, there's something that's like a water jet. It's called a Cavitron. One of the developers for that worked with us. And you know, we feel that we have the right team, the right partners, and the right solution. It's like what Invisalign did for braces and what Botox did for reoccurring cosmetics. That's what we feel. We cracked the code for whitening. Thank you.
Thank you. Questions?
No questions? Thank you, guys.
What's the efficacy like? I know that the perception is those home trays and peroxide doesn't do much, but those painful trays with the UV light and all that tends to have quite a bit more whitening efficacy. How does it stack up?
That's a very good question. So what we're doing, and clinical, we've been doing clinicals for years. I've been doing whitening research for a while. So what you would typically get for a tray system or over-the-counter products, you might get a few shades. And in the professional side, you could sit in the chair for an hour and a half, you might get what we'd call double the result of that, but you're sitting there for an hour and a half, it's pretty painful. We're right in the middle of that. So what we're doing is offering a safe long-term whitening solution to where, like Botox, it works for 6 months. Every time you come in for your dental cleaning, you would get a euphoria experience to where you're safely whitening teeth over time. And as opposed to like if you have something done, you blast your teeth with a harmful level of peroxide and it hurts, to where there's a better way of doing it. Having a long-term safe approach to where you're like a good diet and an exercise program where you're safely doing it over time. And that's what we're doing. And it offers the doctor the unbelievable economics every time the patient comes in.
FDA?
Yep, so we designed the system. One of our head of R&Ds worked at Philips. We designed it for actually European approval and Canadian approval. We're fully FDA cleared. And we're...
You have a CE mark or you have FDA approval?
We have, well, it's FDA clearance for medical devices. Yeah.
Okay,
so we have the clearance for, in the US.
It's a de novo device or it's a 510K?
It's a 510K exempt, but it's designed for getting acceptance under CE in the European market.
What is it? Like, what is the actual
it's a great question. So what we're utilizing is we patented this. It's a very unique technology utilizing ultrasonic energy to activate a whitening solution. And we're doing that in a very rapid manner through this cavitation process. What we're doing is creating like a fizzing of whitening agents to where that really makes it activate very fast and it allows it to work in 4 minutes.
So the solution is in the mouth. You activate it using cavitation.
Yep.
And then what is there's a consumable subscription something you said. What is that?
Yeah, so every time the patient, so the doctor buys a machine and then every patient, there'd be all the materials you would need to have one procedure done.
So a key point of clarification is that add-on to the hygiene appointment, right? So you go get your teeth cleaned because it only takes 4 minutes. At the end of that teeth clean, we plug in the machine, we service your teeth, whiten your teeth. That treatment is consumable. We send you home with a take-home kit, that's a consumable.
Wait, so that's the part I'm asking about. What did you take home?
The take-home kit is, go ahead, Damon.
Yeah, so you have the consumable in office, and then you have a consumable for the at-home, to where it's a 3-day whitening product to where you can whiten your teeth, get further results in maintenance at home if you elect to.
So
you could do it alone in office, but you can also have a take-home component as well.
So you have a highly accelerated kickoff as compared to the competition, but I'm still bringing something home to polish it up and continue to tighten it up the performance of the treatment.
To help you after your wine, your coffee, and your cigarettes, yes.
And what is the, why are you raising venture? So what do you actually need?
Yeah, no, it's a great question.
It's
a great question. We actually need help. We're about to load 1,000 salespeople literally next week, right? We need to get the brand out there. We need distribution support. And this is Gen 1. We put $2 million in bringing this out there. Gen 2 is going to look a lot better, less clunker than this, right? So the combination of those two is, what would the process be used for? We're looking for $5 million for the next round.
And we're an R&D company. We've developed a lot of products for a lot of CPG companies, and this is our first one for the professional setting to hit an unmet need, to where we have other new products that whiten faster, better in the pipeline for down the road.
Thank you, Euphoria.
Thank you.
And you also have expos, so everyone welcome during break to visit your booth. And maybe get some coupon for free.
Yeah.
Your
for free. Will get free whitening.
Okay. It's actually recorded.
That is a trophy.
For lifetime.
I said I need the trophy.
No, for lifetime. For lifetime.
My mic's off.
Okay. Oh, yes. Thank you. So, dear judges, please complete your judging procedure. Jury, I hope you complete your work as well. Don't forget to put your name and name of the company on voting sheet. And now our traditional request for judges, be brave. If you could give quick feedback, each one of you, what company make you most excited out of what you see? So who is brave? Mike, you look like a very brave person.
I'm brave, dude.
You
I'm
heroic
brave. I want to tell you the
ventures,
one that excited me the least, but I'm going to be polite. So I think Euphoria sounds the most compelling. I thought I don't like the fact that I discovered in the Q&A that it's actually a 3-day procedure. I think that was some bullshit. But I think that apart from that, this seems like the most real, the most substantial. There's Mike. By the way, Mike Mabel's everybody, the most famous venture capitalist in the entire world. Mike Mabel's getting microphone right now.
Yes,
I think Euphoria is very exciting. I'd say Euphoria is the most exciting.
Don't steal my work. So, David, any feedback? What company you kind of...
I'll double down on Euphoria. I thought that was described in terms of what they're doing the clearest in the value prop. I'd like to believe that the efficacy can get better and better and better. I think it should be probably compared to that home treatment, which is, I believe, $1 billion business or something. Not, it's slightly worse than what you normally get in the doctor's office.
Yeah, obviously I think Euphoria as well, only because it's the furthest along. I think it's a much more advanced company than the others in the panel, so it has an unfair advantage in the sense that they've got working technology going into the field and broad distribution. The one before that, and I'm sorry, I can't remember the name off the top, but the one in the digital health area where you're doing the testing, I really like that.
TrueMe.
TrueMe, that's it. And I really like the potential there.
Yeah, I think, path towards, at least a substantially profitable company, Euphoria, is very, very interesting. I think World Mastery also was intriguing to me. It sounds like they've found a growth path of real efficiency, and if there's a way that they can crack a persistent relationship with coaches around the world across a variety of verticals, it's a very interesting business, particularly given how worldwide it is already at this stage.
Ken?
I like World Mastery. So I'm very interested in the business model itself. So they are focused on the B2B market today, but they can expand the business to consumer side as well.
I thought Lomics was very interesting. It's a segment that continues to drive very large consumer social companies, and I think that they have an interesting approach.
I think a lot of things have been already said, so I'll double down on Euphoria. Intriguing, like, if the dentist can make more money, World Mastery, if the instructor can make more money. And then third one, I'm intrigued by kind of the space in general is women's health.
Odeeva.
Yeah, like just helping build brands for women-centric brands.
Okay, thank you very much. Let's thank our judges, our jury, and startups.